welcome to the deep dive.
Hmm.
Okay, so Bitcoin, it's trading just under $97,000 right now.
Hmm.
That's, what, about 12% off its all-time high. The one near 110,000 back in January.
Yeah, exactly. Which really makes you wonder, doesn't it? It feels like a potential turning point.
It does. So are we looking at, a significant jump coming?
Yeah.
Or is this maybe one of those deceptive bull traps?
Well, that's the million-dollar question, isn't it? And the information we've got, it paints a really interesting picture, kind of a mix of signals, actually.
That makes how?
We're seeing some technical stuff pointing upwards, suggesting momentum, but there's also this underlying uncertainty you just can't ignore.
Right. So for you, the listener, our mission here in this deep dive is to really get into these signals, these price levels from our source material, the btc.txt file.
Yeah, we want to unpack what they might be telling us about Bitcoin's next move.
Exactly. Give you the key insights, basically, without making your head spin. Okay, so let's unpack this.
Right. Let's start with that tension you mentioned. The technical strength versus the, let's call it, background uncertainty.
Okay.
The source definitely highlights some bullish technicals, like those two recent buy volumes max patterns on May 6th.
Yeah, I saw those
Yeah,
after it got rejected around 93,000.
that's the one. The analysis suggests this could be, smart money quietly accumulating.
Interesting. So big players may be stepping in while things look a bit choppy.
Could be. The takeaway is that sometimes you can spot these early signs of, well, big buyer interest, even when the price itself isn't doing much dramatic.
Okay. And what about other indicators, like the RSI,
Well, the relative strength index, the RSI, on the 1-hour chart, it did touch 71.6.
which is technically overbought, right?
It is, yeah. But the source makes a point of saying it doesn't seem totally exhausted yet. Plus, you've got the money flow index, the MFI, which is pretty neutral, around 47.6.
Meaning there's potentially still room for buyers to push.
Exactly. There might be fuel left in the tank, so to speak. And if you connect that, well, the fact that Bitcoin is trading above all its key hourly moving averages.
That's a 50, 100, 200.
Yep, and even the 233 MA, that really does bolster the case for the bullish short-term trend. It suggests, right now, momentum seems to be with the buyers.
And this feels like a big, but we're still, 13% below that all-time high? That's quite a gap.
It is a significant gap, and the source stresses this. Plus, broader market sentiment isn't exactly euphoric across the board. It's kind of split.
And weren't there some pretty big sell signals just before these recent buy ones, back on May 4th and 5th?
Yes. Crucially, yes. Those intense sell volume spikes. That's a really important piece here.
What does that tell us? That the selling pressure isn't gone?
Pretty much. It indicates there's still a fair bit of supply hanging over the market, stuff that hasn't really been absorbed yet. Even with the recent buying, that selling interest, well, it hasn't just vanished.
So it kind of casts a shadow on how sustainable this upward move might be. Like sellers are just waiting for a higher price.
It raises that question, definitely. And then you layer on the fundamentals, right? The Fed being, well, maybe a bit hawkish.
Yeah, the whole tighter monetary policy thing.
Right. And, the ongoing uncertainty around potential crypto policy from certain political figures. These things can definitely make longer-term investors a bit hesitant.
Makes sense. So how does the source sort of reconcile these different views, short-term versus long-term?
It frames it quite nicely. For short-term traders, this might look like maybe a last chance for a rally up towards that $97,000, $98,000 resistance zone.
Okay.
But for longer-term investors, the analysis suggests caution. Maybe wait for a more solid proof of demand, like a weekly close above $100,000.
Right. A much higher bar for confirmation. Okay, so this push and pull is clear. Bullish signals clashing with uncertainty and that lingering sell interest. So the source then dives into something called volume spread analysis, VSA, to try and get more clarity.
Exactly. And this is where it gets pretty interesting, trying to decode what the whales might be doing.
Whales, the big
Correct.
players.
Yeah.
So VSA is about understanding their intentions.
Sort of. Think of it as trying to figure out if a big price move is driven by real conviction, buying or selling, or if it's just noise. It looks at the price range, the spread, and the volume traded during that time.
So a big jump on low volume isn't as meaningful as maybe a smaller jump on huge volume.
That's the basic idea, yeah. High volume can suggest stronger conviction behind the move.
Okay, got it. So let's walk through the examples the source gave. That VSA buy pattern third on May 4th, early morning. What's the third mean there?
The third often implies it's happening after a previous test of a low point. So May 4th, 0000 hours, price opened and closed roughly level. But the pattern hinted at an upward move after price had dipped and held a lower level.
And did it work?
Well, interestingly, even though a sell signal popped up earlier, the price did bounce first, up towards 96,000, before it turned down again. So that specific buy pattern did flag that initial upward leg.
Okay, so it caught the bounce. Then later that day, around 10 p.m., a VSA sell pattern third.
Yes. And this one seemed much clearer cut. Price dropped significantly. And then, critically, the very next candle showed sell volumes max.
Confirmation.
Big confirmation. And the price kept falling down to 93,866. So the pattern predicted a solid drop, and that's what we got. Not much ambiguity there.
Shows how strong that selling pressure was then. What about the next day, May 5th? Another sell pattern. VSA sell pattern first.
Right, around 7 a.m. Now, the first pattern often signals an initial sign of weakness, maybe a shift starting, even if the immediate move isn't huge.
Okay.
And that's kind of what happened. The price move on that specific candle was small, but the pattern suggested more downside was likely. And again, confirmed shortly after by another sell volumes max signal, and the price slid further to 93,824.
So even subtle volume clues can matter. But then things shifted again on May 6th with a buy volumes max.
Exactly. Tides started to turn. Around 2 p.m., a buy volumes max pattern appeared, indicating a strong chance of a bounce from those lows.
And did we get confirmation this time?
We did, and quite strongly. Later that day, around 10 p.m., another buy volumes max hit, and boom, Bitcoin jumped nearly $2,000 in just a few hours, closing back above 96,200.
Wow. Okay, so that's significant buying pressure coming in.
Looks like it. That kind of volume surge with a sharp price increase is a pretty classic sign of strong buying interest.
So the big takeaway from all this VSA stuff, according to the source, is really zeroing in on these confirmed patterns and the big volume spikes.
Precisely. Trying to filter out the everyday market noise and focus on signals that actually get followed through by price action.
So it's less about predicting and more about reacting to what the market actually shows you.
That's a good way to put it. Wait for the clues, the confirmed patterns, and then act based on that concrete information.
Okay, that makes sense. So we've seen how these VSA patterns played out recently. Let's zoom out a bit now and talk about those critical price levels, the source flag support and resistance.
Right. These are basically zones on the chart where price tends to react, you know, finding buyers at support or hitting sellers at resistance.
So where's the first key support level if the price dips from here?
The source points to $94,204.8, calls it a local bounce zone. So if price holds there, it shows buyers are defending it, at least initially.
And if that breaks, where next?
Down to 91,984.2. That's labeled a historical demand pocket. Suggests significant buying interest showed up there before. Might again.
Okay, a stronger potential floor then.
Potentially.
Huh.
Below that, 90,628.7. That's called structurally significant. And the source terms it the last defense before a deeper fade. So pretty critical for the current structure.
And there are a couple more below that too.
Yeah, 88,581. Described as unfinished business. Kind of implies price might have a strong reaction there due to past action. And then 84,791.2, that's called the line in the sand for the midterm trend. Breaking that could signal a much bigger shift downwards.
Okay, quite a few levels to watch on the downside. Now, it was interesting, the source didn't list immediate resistance levels nearby, but focused on these powerful resistance levels way lower down. Why look at resistance so far below the current price?
Good question. It's really about understanding what a major recovery might look like if Bitcoin did have a significant drop first. These aren't immediate ceilings. They're more like major milestones on a potential climb back up after a fall.
Okay, so like 67,838.7, the major supply shelf. Breaking back above that would be a huge deal.
Exactly. Turning that level from resistance back into support would signal a really significant shift, showing buyers overpowering past selling pressure. It's about understanding the magnitude of potential trend changes.
Gotcha. And then levels like 60,002, 95.6, the previous macro breakdown level, and 47,001, 22.4, the heavy level with massive order blocks. These sound like places where big money made big decisions before.
They likely are. These levels have history, institutional memory. Reaching them again would probably trigger major reactions, buying or selling, based on what happened there previously.
And way down at the bottom, 28,696.9, the bull market birth zone, and 26,8, 41.6 from the 2022 lows. Hitting those again, well, it'd be serious trouble, wouldn't it?
Yeah, the source implies those would signal deep market problems, potentially a full cycle reset. And crucially, remember any of these support levels we talked about earlier, if they break decisively.
They become resistance on the way back up.
That's the classic technical principle, yeah. Broken support often flips into resistance. So they're not just floors, they can become ceilings later.
Okay, that's important. So we've got these key static levels, but then the source introduces this other concept, raise from the beginning of movement. Sounds more dynamic.
It is. It's an interesting shift away from just fixed price targets. These rays are described as dynamic lines, apparently based on Fibonacci ratios. They act sort of like channels or gravitational lanes for price.
Gravitational lanes, huh?
Yeah, the idea is that price tends to interact with these moving lines as trends develop. Think of them maybe like adaptive trend lines based on past significant moves.
So instead of just watching if price hits, say, 94,000, you're watching how it behaves when it hits one of these dynamic rays, and then looking for confirmation.
Exactly. Confirmation through volume, maybe one of those VSA patterns we discussed, or how it interacts with the moving averages. The strategy is all about waiting for that interaction and the confirmation signal.
Okay, so it's a process. Let's talk scenarios then. What's the optimistic or bullish setup using these rays?
Well, first off, price being above the MAs currently is positive. The first potential buy setup, according to the source, is a dip and retest. Either of the 200-hour MA, that's around 95,276, or a nearby VSA ray.
But you need the bounce confirmation.
Absolutely critical. Wait for the bounce. If you get it, potential targets mentioned are 96,610, then that 97.5 to 98K zone, and maybe up towards 100K to 102K.
Okay, and the second bullish setup.
That one's a bit more aggressive. It's looking for a break above 96,610, followed by a successful retest of that level as support. Ideally, you'd want to see volume picking up in that break and retest.
Confirming the breakout strength.
Right. Targets there. 98K, then maybe a VSA resistance ray around 100K, and ultimately looking towards that all-time high near 110.
Okay, those are the upside plays. What about the flip side? The pessimistic, bearish view using the rays.
The bearish scenario kicks in if we start breaking below those key moving averages, especially the 100 and 200 hour.
Makes sense.
The first potential sell setup described is a break below 95,200 and importantly, a confirmed close below the 200-hour MA.
Okay, what are the targets then?
First target down would be that 94,204.8 support. Then maybe the next rate interaction zone around 91,984.2. Could even see a quick spike down towards 90,628.7.
And the second sell setup.
That one involves price maybe bouncing off a ray, but then getting rejected when it tries to get back above the moving averages, like the 100 or 200. A failed retest, basically.
Sign of weakness.
Exactly. If that happens, targets are again 94.2 or 4.8, then potentially down to that 88.5, 81 level, and maybe even a panic move towards the line in the sand at 84.7, 91.2.
So with this whole raise strategy, it really sounds like patience is absolutely key. You can't just jump the gun.
That seems to be the core message. You wait for the price to actually interact with these dynamic zones, the rays or MAs, and then you need that confirmation VSA, volume, strong price rejection, or bounce before making a move.
Reacting, not predicting.
Precisely.
Yeah.
Reacting to what the market does at these critical dynamic points. The source really emphasizes that each level, each ray, can be either a launch pad or a brick wall, depending on that interaction and confirmation.
All right, so let's try and wrap this up. We've done a pretty deep dive into Bitcoin, sitting there just under 97K.
Yeah.
We've seen this mix of signals, some short-term bullishness from technicals, but definitely shadowed by underlying uncertainty and that leftover selling pressure.
Mm-hmm. And we saw how recent price moves seem to line up pretty well with those VSA patterns, suggesting paying attention to confirmed volume signals can be, well, quite useful.
Right, and we've mapped out those key support and resistance levels, both the nearby ones and those significant lower ones, that could really define where Bitcoin heads next.
And importantly, we looked at this idea of dynamic rays, moving levels of potential price interaction, highlighting that core idea. Wait for confirmed interaction at these dynamic levels, or MAs, before acting.
Observe, don't just forecast.
That really seems to be the central theme coming from the source material.
Okay, so here's a final thought for you, the listener, to chew on. Thinking about these dynamic Fibonacci-based rays, how might focusing on price interaction with moving levels, rather than just hitting static numbers, change how you look at market movements?
Yeah, how does that dynamic perspective shift things compared to just watching fixed targets?
Something to consider as you keep watching Bitcoin in the markets. Thanks for joining us for this deep dive.